Obviously, a third of Australia is trying to pay off its house. Another third have investment properties that presumably, of course, are the ones represented by the 30% of people who are renting. So let's say somewhere between half and 60% of all houses in Australia are focused on interest rates. Under this government, they've gone up not once but 12 times since this bloke became Prime Minister. And tomorrow, the Reserve Bank has its final chance of this year to take some of the pressure off homeowners. Now, the reality is the per capita recession means they should be doing that, but because the inflation numbers are still too high and the inflation numbers that are so-called coming down are artificially coming down because of things like the government using taxpayers' money to make it seem like power bills are coming down, Michelle Bullock, the Reserve Bank Governor, has made it very clear that she ain't for budging. So, most likely, the expectation is that nothing happens tomorrow. But I'm indebted to the work of the West Australian that broke down some numbers which account for the entire country. But have a look at this. Some struggling homeowners have sold their properties after rising interest rates pile an extra $38,000 on top of an average loan since 2022. Since this mob came to power, an extra $38,000 on top of what you were already paying off. The research commissioned by the West Australian shows that those with average size variable home loans of $433,000 have paid a total of $65,000 in interest since the first rate hike just before the last federal election, 12 more since the last federal election. The mortgage comparison site Finder, well, they also crunched the numbers to reveal that $38,000 is the amount that was the result of the cumulative interest rate rises, one before Albanese was Prime Minister, 12 since he's become Prime Minister, causing a 140% blowout in total repayments. Again, because of this scenario where core inflation is still nowhere near the 2 to 3, instead, that is a little closer to 3 to 4%, because there's a whole collection of other things that the government has not artificially dropped. That's why the expectation is that nothing happens tomorrow and the pain continues.
A rate cut is not tipped for tomorrow. In fact, most of the major banks predict we won't see any relief until the middle of next year.
This decision by the Reserve Bank tomorrow, the last decision, markets, economists say things are on hold. The big question now is, when does it really feel conditions in Australia are such that it can start to cut rates? What's your own sense on that?
Yeah, well, I don't think it's going to be for a while yet, and I still don't think you can rule out the next move in rates being up.
Of course, Warren Hogan has been consistently saying up is more likely than down for all of the obvious reasons. This is the true financial pressure and pain across millions of Australian households. Those who represent unionised workers, Sally McManus and the ACTU, well, they are now going directly after the Reserve Bank and its governor. Now, remember, laws have passed the Parliament to change the types of people who make decisions on the Reserve Bank. This government has said that they want union officials, maybe even potentially Sally McManus, deciding whether interest rates go up or not. And if she was in the room, she votes drop them.
Working people are urging them to cut interest rates. We're urging them to do that because too much pressure is on Australian working people at the moment, especially those people with mortgages. And that's because the National Accounts showed last week that half of the cost of living pressures that are causing household spending to go backwards is because of housing costs. And that is something the RBA can address. They can address it in the next 2 days.
Likelihood is that they will remain deaf, and in part because of the actions of the current government.